Hey friends, welcome back to the channel. My name is Sanji, and in this video I'm going to tell you why I wouldn't actually buy one of my favorite stocks on the Australian Stock Exchange. And it's basically because it's a rip-off right now. It's actually Australian Foundation Investment Company, a well-known, extremely large, has been around for many years, listed investment company. It actually takes up about 15% of my portfolio, and I've had them for quite a few years. And if you were to ask me, would you actually buy AFIC right now? I'd say no, because it is currently trading at a premium. It's a bit of a rip-off, and also it's also the comments of one of their own employees during their half-year update actually mentioned, look, we wouldn't necessarily be recommending someone buy AFIC at this current price. So I'll talk about that a little bit later. So let's get into it. So let's start with what is AFIC. AFIC is Australian Foundation Investment Company, code AFI. It's been around for a lot of years. It's basically a company that goes out and buys shares in other companies, collects the dividends from those companies, and uses that cash to either pay it out to you and me, the shareholder, or to go and buy more shares in other companies to try and build up the investment portfolio. It's similar to an ETF in that it does end up actually investing in the share market itself, and also does have quite low fees. We're talking about a 0.1% fee, which is very similar to like a VAS or an A200 from beta shares. However, that being said, it is actually managed by everyday people. So they're actually humans who are deciding what to buy and sell on the AFIC register. So in this video, what I wanted to point out though is right now it's actually trading at a bit of a premium. Now this is relevant when it comes to listed investment companies, because the way you would essentially value a listed investment company is you would say, well, what are all the companies it's actually invested in? What's their collective value? And how does that compare to how this particular LIC is valued on the share market? So for example, let's say AFIC was currently listed for $10 a share, but if you looked at all the companies that were sitting underneath it and translated that into a dollar per share value, and that came out to being $9 a share, you'd say, hey, it's being listed at a bit of a premium. It's currently being, on the share market, it's currently going for $10 a share, but everything that it's actually holding is only worth $9 a share, so it'll be trading at a bit of a premium. And that is the situation we're finding right now with AFIC. It's currently trading at about a 5 to 10% premium. Now I can show you this in a graph that AFIC themselves publish. So in this graph, you can actually see there are periods where AFIC is sitting at a premium, where the line is positive, it's above 0%, and there are times when it sits at a discount. Discount is great because you're basically paying $1, let's say, for every dollar of shares you're buying of AFIC, you're getting maybe $1.20 worth of value. But here, when it's running at a premium, you're actually paying $1.10 almost. Let's say you're paying like $1.10 for only $1 worth of value. So you're kind of getting ripped off. That's what I'm saying there. It's been sitting at quite a high premium, above 5%. And when that actual presentation, the half-year presentation occurred, and one of AFIC's own team said we wouldn't necessarily be recommending people buy it, it was when it was sitting closer to the 10% mark. So this is where I'm a bit wary of buying AFIC, even if I want exposure to the Australian share market. And I'll talk about what I would actually do now later, but that's what I wanted to point out. Now, AFIC themselves do point out on their own website that there are some reasons as to why AFIC shares could be trading at a premium or a discount. And they list out it could be market's perception of AFIC's future earnings and potential to generate dividends, their market's perception of their management capabilities, and also general supply and demand for AFIC shares during periods when you're switching from value to growth, or when you're going from growth to value. So you could almost say AFIC's value is actually equal to the market's perception of their management team, plus potential for future dividends and earnings, plus the actual net tangible assets of the actual company. What's all that actually worth? And if you take away the current price from the NTA, you get the premium or the discount that the market is basically putting on AFIC. So for me, the fact that it's currently trading at a premium puts me off AFIC right now, because I'm not really seeking that consistent dividend income. If I was, however, someone who was later on in life, or who was a retiree and was relying heavily on my dividend income from my investment portfolio, I would value AFIC's ability to consistently deliver dividends that are also fully franked, because I kind of need that money to live on, and I want to redeploy my capital in that way. But I can understand where a younger person would say, no, I don't want to buy AFIC right now. It's trading at a premium. I don't want to get ripped off, essentially. I'd rather buy an ETF. So for myself, if I wanted to actually get exposure to the Australian equities market, I'd be targeting an ETF like A200 or VAS, like a Vanguard or a BetaShares product, because it basically gives me similar exposure to what AFIC does. That being said as well, when you actually look at some of the long-term performance of AFIC, it's very similar to A200 basically in terms of the S&P 200 accumulation index. So that's where someone like me is kind of looking at AFIC saying, love you guys to bits, but right now you're a bit of a premium, bit of a rip-off. I'm not going to buy you. I'm not going to sell you either, but I'm definitely not going to be buying AFIC right now. So for me, if I want to invest in the Australian share market, this is kind of the mindset I use. Number one, is AFIC available? Is it currently at a premium or a discount? If it's at a discount, then it's a no-brainer for me. Yes, I'd invest in AFIC. Love the business, I'd go for it there. If it was at a premium though, then I would basically pivot to saying, okay, well, I still want Australian exposure. I'm going to use either A200, the BetaShares product, or VAS, the Vanguard ASX 300 tracker. And I'd just pick up one of those because they basically do the same thing as AFIC. But if you can get something like AFIC at a discount, you should, because you're basically, you saw some of those premiums, you could be paying $1 for $1.10 worth of stuff. So hopefully you enjoyed the video. If you want to see my previous video on AFIC, where I actually commented on some key takeaways I had from their recent update, click up here. I've got some other videos on ETFs down here, and I'll see you in the next video. Bye for now.